Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on Friday, the 20th of January, 2012, getting on right now, believe it or not, to about 10 minutes to 2. It's one of the earliest I've done these updates, but there's a snowstorm, one of size, coming into Chicago, they're saying. So a lot of us are getting ready to say, bye-bye, we're not going to fight traffic all the way home. It doesn't make sense. Very lethargic, quiet market today. Literally for the whole day, the S&P has been losing to the Dow. For those of us that watch the metals, very nice hold on last night in the gold market. The silver was the real star today. Punched out, and the market that I've been expecting to fall, copper, did it on day 6. 5 days in a row, it stayed over the Bollinger Band top. Today would have been day 6. Under it by a sizable amount. Technical study proved this point. In looking at the euro, down a little bit, you're getting a mixed picture here. As we're going to get a lot of information over the weekend on what's going on in Europe and how they're doing with this debt struggle that they're having in Greece. We'll see where the banks go, where Germany wants everybody to go. It's a pretty mixed picture. But the gold has had a labored rally. I wouldn't call this a big run. From the end of November, 15 and a quarter, let's call it, you're up to 16.40. You've rallied $125, and it's been a very, if you will, orderly rally. Not the easiest, I would say, to trade, but it has made higher highs. It's got the higher lows, so the swing line is acting good. What I've not liked is that you haven't had an opportunity to come in and buy against the 18-day average. Prices have stayed away from it, but you're still bullish as long as you're over that number. But you're now encountering your first resistance. Now, in bull markets, typically the longer-term averages are under the market, not above it. When they're above it, they're not just there because they're there. They offer resistance points offered. And now you've had 3 times that the 45-day has offered that resistance. If you can clear that, 1701 is your next hurdle, along with the Bollinger top, which comes in again at 1685. So you've got a couple of hurdles there, but there's nothing bearish on the chart yet. Even if you were to take out 1642.10, the last break low, so what? You're still over the 18-day average. That would just be a support when you fell back to it. When do you get an idea that this momentum in gold is leaving? When this indicator, where the red of the brown lines, when the red one gets under 80, it'll give you a pretty good indicator that the market has lost this bullishness and probably needs to pull back to at least the 18-day average to figure out what it's going to do next. You know, you'll see this be in the silver market, and this is silver up to the Bollinger top for the very first time in a long time. That is a zone where I tell you what, if you're long, this is where you're coming out. You have a fully embedded stochastic, a powerhouse. Here's copper, and yesterday I was talking about copper. I said, you know, you got 1, 2, 3, 4, 5 days. The only market I saw recently do 7 was in a stock indice, and I can't say anything. I had not seen 7 before, and I'm talking lead contracts. That doesn't mean that I changed my whole scenario. I still say that the odds there are so infinitesimal of it not getting back under the Bollinger Band that I can't explain it. Doesn't mean I'm selling the house to go short. You're still over the 18-day average, and you're still in an uptrend. And today, you're down 600 points as it got right back under it. And that's the point. You look for these and you play the percentages. That's all you can do in futures markets is you look for the percentage plays. I like platinum here. It's acting good. It not only rallied, it keeps hitting up against the Bollinger top, and markets that are very bullish pull back and then snap back and go right at them. It too has an embedded stochastic, so that's looking good. Euro currency. Euro got for the first time, and I want you to look at how long it's been since it's been able to stay over that 18-day average there. So there could be more to run to the upside. It's certainly not in a downtrend yet. I think ultimately it can be, but right now, no. So you don't fight charts. You know, what I love you to do is cover the name of a chart and look at the chart pattern. What's so bearish about this? I can't find anything. The market might want to go to the 131.29 zone. I know you'll say, oh, I want to know the fundamentals. And I go, every fundamental you think you know is in the current price of this market that is live at 129.23. End of discussion. Everything known, I believe that completely, is there for you right now at this point in time. all over the world, and that's why that price is sitting there. That's one of the philosophies at least I have. I'll tell you a market that I think is rolling over to the downside. If you look at the chart here, you're making lower highs. You've got your lower low. We don't know where this one's going to end, and this is crude oil. And it acts like a market that wants to get back into that $98 area. So that is something.